Let's complete the loop and talk about where things are with regard to interest rates, talk about the fixed deposit options that you might have, what the expectation is going forward, because you could well see another rate cut by the Reserve Bank of India when the Monetary Policy Committee meets at the end of the year, based on where inflation is and the expectation that growth needs to be bolstered. And so therefore, how should you plan your investments? One, and two, if you are currently paying back a loan, what should your strategy be? Should you reprice your loan if you've taken a loan a while back, in which case you might well be under the marginal cost of funds lending facility, or MCLR? You should be thinking of moving towards the benchmark linked rate, which is much faster in passing on any cuts that you might have seen by the Reserve Bank of India. I'm joined today by Adil Shetty, who's the Chief Executive Officer of bankbazaar.com. Adil, thanks so much for taking the time, and hopefully I've set things up for you. Let's talk about the prevailing rates right now on the investment side in the fixed deposit space. Where do they stack up right now?
So for a regular customer, and obviously FD rates have different rates if you're doing, less than 30 days, 1 year, 2 year, 3 year, but let's just give averages because we want to give viewers a sense for where the market's at. So for a regular customer who's not a senior citizen, the rates are between 6.5 to 7%. Some of the bigger banks might be on the lower side or slightly lower than 6.5%, and some of the more aggressive private sector banks, right, could be closer to 7%. So for a regular customer, you're thinking of between 6.5 to 7%. Now, if you're a senior citizen, you move a band up, right? And you're between 7% and 7.5% amongst the large banks in the country for a senior citizen. Now, outside all this, there are small finance banks. So if you go to a small finance banks over and above what I just laid out, you probably can get another 0.5% on top of that, Alex.
So do you have to be wary though, and what are the thumb rules to follow? Because the RBI does give you an insurance for fixed deposits in banks, but it's restricted to a certain amount. Should you split it therefore in a few banks to the extent of that deposit limit that is provided for under the insurance rule?
Right. So, see, the good news is that no bank has collapsed in India in the last 50 years. So we have a great regulator in the RBI. They've always made sure that people have got their money from the bank. And like you said, there is an insurance cover, right? So that insurance cover is available, which is backing up the amount up to 5 lakhs. But I think your point about splitting the money in multiple banks does make sense, because we have seen instances, Alex, where a bank might go under a moratorium. So a moratorium actually means your money is safe, right? But you can't access the money, or you can't take that money out for 30 days or 60 days, and there's a certain per day limit. So in that sense, I'd say that if you're a spouse, a husband and wife couple, you can potentially look to open FDs in different banks. So I'm just saying, it rarely happens, but even if there's a moratorium, you have access to your funds because they're at multiple institutions.
Okay, fair enough. And so therefore, if you are a senior citizen and if you are thinking of deploying money, and if you want the best possible rate, there could well be, Adil, another rate cut of 25 basis points in December. And the expectation is that the repo rate, which is the rate that the RBI charges to banks to park money overnight with them, and which determines all of the rates through the system, is expected to fall from 5.5 to 5% in this current cycle, which could well spill over into next year. And I know that this is a little technical. Basically, the expectation is that the RBI, the Reserve Bank of India, will cut rates, interest rates, by another 0.5 percentage points. Should you get ahead of that, Adil, and get a fixed deposit now before that takes place?
So I feel you're right. There's a general market expectation when a survey of economists is taken that, there could be another rate cut later this year, which will mean, right, that eventually deposit rates will come down. So even in the last year, for a normal person, more than a year ago, we were saying you could get an FD at 8%. Today, we're saying at 7%, you're lucky, right? because a lot of large banks are actually at 6.5% or slightly below. So yes, the rates could go down further, especially if there's another rate cut. So yes, if you are looking to keep your money in FDs, probably better to do it before the rate gets cut further. I think this is probably instance wherein 7% might still be available, and with another rate cut, that might not be. Also, one thing to note, right, is now it's starting to pinch a lot of people on FDs, because even if you're a senior citizen, post-tax, right, your 7% or 7.5% might be, down to 5-6%. So I think it's also a time to consider saying, does a debt mutual fund make more sense? And again, debt mutual fund has the same tax rate, so you're not saving money in the tax rate, but the tax becomes effective only when you sell the unit. And because of the nature of the instrument, right, effectively you can cut your tax rate significantly, even by half, because you're selling your units over a longer period in time on which the capital gains on that debt mutual fund are getting looked at. But I know how senior citizens are. I know how my father is. I know how my in-laws are. So they love fixed deposits. Yeah. So if you're looking to lock into fixed deposits, do it now rather than wait for 6 months.
Yeah, it's a good point. Incidentally, just before you came on, Adil, we were talking about options for senior citizens, and the advice was indeed to look at fixed deposits for your shorter term requirements, but to look at a multi-asset fund, for example, which has a significant amount of, or a hybrid fund, which has a significant amount of fixed income, but also has a little bit of equity so that you can beat inflation over the long term. And I think the new tax laws are great for senior citizens, because you can earn interest of up to 12 lakh rupees or a little more than that and not pay any tax, which is excellent and takes care of a lot of needs. But having said that, I want to ask about the borrowers as well, right? Adil, a lot of people who borrowed a while back, and I understand that number is reducing. We're still talking about 40-50% of borrowers on the retail front that are on MCLR, where the repricing of the loans and the transmission takes place a little slower than the current benchmark linked rate, which is pegged to the repo rate, right? So should you shift now, because a while is gone by where you may not necessarily have gotten the advantage of those lower rates?
Yeah, you're right, Alex. It's a really good time, I think, for home loan borrowers, if not for fixed deposit investors. So, for example, on my home loan right now, I'm paying 7.75%. But on, and home loan searches are one of the top searches online, right? And at Bank Bazaar, what we see is right now the rates are, let's say, between 7.5% to 8% for a new home loan. And things have become so cool, right, Alex? The RBI, because of its push on a repo-linked loan, there are loans in the market wherein the day after the repo rate has got cut, right, the day after it directly flows into your home loan. Usually it was 30 days, 60, 90. Now a T+1 repo-linked loan is available. But let's come to the point you made, Alex. 40 to 50% of public sector bank home loan holders, and let's say a quarter of the entire market, is still on MCLR. I think the key question to ask yourself, right, is if I have friends, or if I know when I check online that I can get a new loan at 7.5% or 7.75% or even 7.99%, if my saving over what I'm paying today, and someone might ask me saying, how do I know what I'm paying today? I keep getting emails, I'm not sure. Just go to your mobile app, open up the loan account, and it will tell you what your prevailing interest rate is. If you can save more than 0.5%, between what you are paying and what the new loan you're eligible for. And the reason I say the new loan you're eligible for, right, is if your credit score is above 800, if your credit score is above 750, you're actually eligible for special offers. But let's assume you can save more than 0.5%. You can either talk to your own bank to shift you from an MCLR to a repo, or you can talk to a different bank. So both banks are, both options are available. Alex, if the one takeaway from this show is people should check their mobile app, see what the rate is, and see if they can save themselves some money.
Yeah, and that cost can be anywhere between 0.25 to 0.5% of the outstanding amount. But assuming that we are not yet at the end of the rate cutting cycle, we could well be several months before the rates go up again. And so you could have a period of time where you're paying a significantly lower rate of interest than you're currently paying. So it's certainly something to pay attention to. Maybe pull out a calculator or just write down on a piece of paper what the effective difference would be and take that call. There will be a lot of lenders that will be willing to reprice your loan for you. Adil, thanks so much for taking the time today. Pleasure speaking with you.
Thanks, Alex.
Right, that brings us to the end of this edition of Your Money Matters. Let us know what you think and tell us what you'd like to listen to. This is NDTV Profit.